In today's video, we're comparing Cornerstone with another top performing dividend fund. And then later in the video, I'm going to share with you how I sell options to not only get higher premiums and control stock without owning it, but it also pays down my margin in the process. So we earn over $100,000 per year in dividends at this channel. And we're also outperforming the market. We're at 0.79 today, which is about $5,000, which I always tell you is not important. We're outperforming the Dow. We're in line with the other indexes. But on a year-to-date basis, we're up now 34%. You see? Well, actually, almost 35% now. We're up 34% yesterday. We're up almost 35% now. Dow Jones is up 2, S&P's up 13, NASDAQ's up 29%. So we're beating all the indexes on a year-to-date basis, and that's because of Cornerstone. And now we're comparing Cornerstone with ADX. And I'll just share with you quickly. Here's ADX on the Morningstar test. And it's a 3-star fund. And look, over the past 10 years, it made about $34,000, as you can see here, 34,406. So it competed with the indexes pretty well. And it's also, if you go to their website, on the Adams Fund's website, you'll see that it's trading at a 15% discount to its NAV, which is 19.75, and it has about a 6% dividend. It's been out since 1929, so it's really a great fund. But I'll tell you why I like Cornerstone better. I mean, it's pretty obvious because, first of all, if we go compare Cornerstone in the Morningstar test, you'll see that it made a little bit more money than ADX. It made, let's see, Cornerstone right here, strategic value. It's a 4-star fund, like I always say, and it made you $50,000 over the last 10 years. So right now it's showing only 38 because it's pulled back since 2022, the bear market from last year. But look, it outperformed all indexes there. So this goes contrary to Portfolio Visualizer, which a lot of people tell me shows that CLM is underperforming, but it's not. Look at the Morningstar chart there, and on 10,000 invested. And look at the market price of Cornerstone. $8 is the market price. And look at the drip price, 649, 679, 671, 654 right here, okay? These are all the dividend reinvestment prices, and they give you monthly gains of 28% per month here, 679 for a 23% gain there. Let's see, any more? 671 right here, 25% gain. So this happens monthly, okay? Cornerstone is a 4-star fund, as you saw. It tracks the indexes. So that's how I'm getting my performance. I get my performance from Cornerstone, margin, and tracking the indexes. And it has a 21% dividend, beat the S&P over the last 10 years, and it reinvests that dividend at the NAV every month for those capital gains you saw, those 20% gains, plus it gives you days gains potential, 0.66 and 0.62. So we're up about $1,000, $2,000, about $3,000 in Cornerstone alone today. If you need help with playing Cornerstone or with using margin, email me for my e-guides at akintodd48@gmail.com. And then now we're going to segue into how I sell options to control more stocks without taking the risk, because when you sell options, you don't have to own the stock, and it also lowers my margin in the process. So, okay, I have an option here on IEP, as you can see below. IEP $60 put, okay? But I made $15 on the sale of this option. So you do 60 minus 15. Really, you do 16 minus 15, 40, okay? But just for math's sake, 60, okay, minus 15. 60 of this strike price is 60, okay? 60 minus 15, what do you get? 60 minus 10 is 50, minus another 5, so 45 minus the 40 here. So about 44.60 is my cost basis for IEP in this option, okay? Now I had other IEP options, but I closed them for gains. Now let's just go in here and explore how to do this again. So you go to you just say add, okay? You go to your options section, you go to IEP, you see a put strategy, okay, put, and you say sell to open. You don't say buy to open, you say sell to open because you're selling options, and you go market. And since the stock price is now down at 30 because it took that beating recently from the short sale from Hindenburg, we already did a lot of videos on IEP, so go see that on my wall if you're interested, and more on what IEP does. So let's just call this, for rounding purposes, 30 is the strike price. Okay, let's go find a strike price at 30. So if 28 is the current price, 30 gives me a realistic price to sell at, and because it could probably hit 30. We know that. So what am I getting for 30? We're getting $600. So what's 10% on 30? That would be $300. So 20%, $600. So we're getting a 20% premium just for selling this option on IEP. And what's our cost basis as a result? We do 30, okay, minus 6. So 30 minus 6, because we're receiving about $6 here, okay? $6. So 30 minus 6 is 24. That puts our cost basis at 24, and the current price is at 28, almost 29. So it's giving us a much better way to enter the stock. We get a lower cost position, and if we get assigned, we want assignment because we're going to get paid a nice dividend, about a 20% dividend, because Carl Icahn has about a 20% dividend right here. Now, are they going to pay the dividend? There's a lot of speculation on, can he still survive? I don't look at such numbers. I don't worry about these kinds of issues, okay? I just worry about position, size, management. So if I keep Carl Icahn at 10,000 at all times, it doesn't really matter what it does. Not one fund will take down my performance in my account because I only have 10,000 in it. And it's Carl Icahn. It's just like another sector. It's just like metals in the S&P or technology or financials. You want to have exposure to every sector and asset class that you can that's high quality. Carl Icahn is a high quality institutional investor. So, of course, I'm going to follow Carl Icahn and have some of my money in his fund because he's a top quality fund manager. So preview order, I could just simply preview and place this. And the reason why I'm not going to place this order is because and I think I waited here too long to place the order. So it froze for me for a second there, but I'm not going to place it because I already have exposure to Carl Icahn. Okay. I already have, as you saw, I had 5,000 stock and I have 6,000 of a sold put that you saw already that I'm down on. So I'm just letting those dividends cash flow. On the put side, I'm not getting dividends, but I'll get assigned at around 44, as you remember. And from there, I'll take my dividend and let that cash flow the investment. I'd rather let the investment come back rather than buy any more here, since I bought a lot on the dip recently and sold those buys for gains. I day traded those out. So I'm not interested in adding more risk to IEP, even though it's juicy and I want it. If we go to a chart of IEP, I bet you it'll entice me even more. Let's see. If we scroll in here, we'll see, okay, it's looking cheap on its chart, 28% dividend, if you saw that just then. Typically, it pays around a 15% dividend. And so, look, it had a big drop from the Hindenburg report, which a lot of people think was unfounded and completely untrue. That's up to you. What do you think IEP is poised to do? Is it poised to just resume its uptrend? I mean, normally it moves sideways like this, as you can see. Is it going to resume its normal activity and march back to its old highs, or is this fund done for? I don't know. So I always just do position size manager. I just manage my dollars in the account and I let the dividend cash flow that. So if I manage my position size, then it can't take me down performance wise. And if I let the dividend cash flow it, then I can't really lose long term, as long as the dividend stays intact. So the chart here, it still has a lot of room to go before it's overbought at 80. So it's worth taking a stab at here if you believe in Carl Icahn. I do believe. I just have too much money in it already. I do think that we could pop up to this purple line, which would be the blue. Which would be the 50-day moving average, which is the all-important moving average, and it would probably face resistance there. And sell off for a bit before it marched higher, but otherwise it's had a nice move from 20 to 30, so it's up 50% in the last month really. So I'm not going to touch this one right here since I already own it. Other people who don't own this fund might want to own IEP for the dividend, and now we're up 6,000 for the day, 0.93, or you might not want to own IEP and sell the put like I did, okay? Now, you can sell the puts for a lot cheaper than I did. I sold the put at 60 when it was trading around 50, and I still had a lower cost basis of around the 40s, like I explained to you. But if you want to own the stock, go ahead, or you can look at selling that put. You're getting a 20% return, as I just showed you, on selling that put at 30, and you're lowering your cost basis to about 24. It's a nice risk-adjusted way to get into Carl Icahn's fund, in my opinion. So I use Cornerstone. For my performance, I use margin. For every $1 I put in my account, I get $4 of purchasing power, and I just use that to my advantage to earn the income that I do of over $100,000 per year in dividends. and these dividends will pay back my margin debt at the end of about 3 years. As you see here, my margin debt below is 240. So if I just let my dividends come in, I will pay down this margin debt. It will be at zero in less than 3 years, and then all these dividend paying assets will be left to myself, free and clear for life, paying me monthly dividends for life, which acts as qualifying income to banks and allows you to live financially free. Day trading does not do this. They do not provide qualifying income, only jobs, pay stubs, and dividends. So this is my way of living financially free at my brokerage channel. So I hope you enjoyed this video. I hope you appreciate some of these pearls I'm giving you on living financially free with dividends, with margin, with Cornerstone, with qualifying income. Again, if you have questions, email me at aikentod48@gmail.com for my e-guides, and I'll talk to you soon. Thanks.